While the new tax law has simplified tax calculations for many individuals, it's actually made it more complex for others, particularly if you have income from a pass-through business. We define those pass-through businesses as partnerships, limited liability companies, S corporations, and sole proprietorships. So if you have income from one of these sources, you may be entitled to a deduction on your personal tax return known as the Qualified Business Income Deduction. To determine if you qualify for this deduction, we first have to look at your total taxable income. That's the income to which your tax rates are applied. So it includes all sources of taxable income, salary, wages, taxable interest, taxable retirement income, and then of course minus your standard deduction or your itemized deduction. So if that amount is less than $207,500 for an individual or $415,000 for a couple, then the qualified business income deduction is simply 20% of the pass-through income. If your total taxable income exceeds $207,500 for an individual or $415,000 for a couple, then we have to look at the nature of the business in the pass-through entity to determine whether or not you qualify. If the pass-through business is a professional services business, and that's one that essentially provides a service but doesn't really sell any goods, such as a medical practice or a law firm or an accounting firm, and your total taxable income exceeded the limits that we just mentioned, then you don't qualify for the deduction. Interestingly, engineering firms and architectural firms were excluded from this definition of a professional service business. If you're not a professional service business and your taxable income exceeded the limits that we just discussed, then we have to perform a calculation to determine whether or not you qualify for the deduction and the amount of that deduction. And that calculation is really beyond the scope of this conversation, but it involves the amount of income from the pass-through business, the wages that that business pays, and the amount of depreciable property. So you can see, while the new tax law has simplified tax calculations for many people, if you're the owner of a pass-through business, it has likely complicated your tax calculation.